Have you ever wondered why some of the most influential people in technology, finance, and government seem to keep showing up around Ripple and XRP? Today's update isn't about price predictions. It isn't about hype. Instead, it's about something that could be far more important in the long run. A recently leaked attendee list from a highly exclusive private gathering revealed names connected to some of the biggest institutions, governments, and technology companies in the world. But what caught my attention wasn't just who was on that list. It was the connection back to Ripple and XRP. And later in this video, I'll show you why one particular name could be more important than most people realize. Because when you step back and look at the bigger picture, you start noticing a pattern that has followed Ripple for years. Welcome back to XRP Update. For those who have followed XRP for a long time, one thing stands out. Ripple has always attracted people with deep connections to major financial institutions, governments, regulators, and technology giants. That's one of the reasons many long-term supporters continue paying attention. Recently, information surfaced about an invitation-only gathering linked to billionaire entrepreneur Peter Thiel. Now, Peter Thiel is a name many people already know. He co-founded PayPal alongside Elon Musk and played a major role in shaping modern digital payments. He also created Founders Fund, one of Silicon Valley's most influential venture capital firms. What makes this particularly interesting is that Founders Fund was one of the earliest investors connected to Ripple, long before Ripple became the company most people know today. Back when Ripple was still operating under the name OpenCoin, these connections were already forming. Now fast forward to today. A leaked list from Peter Thiel's private dialogue retreat revealed more than 200 attendees, including government officials, technology executives, economists, investors, and policymakers. Some of the names included current and former Treasury officials, senators, major technology leaders, and influential figures from across the financial world. But among those names, one stood out immediately: Susan Athey. If you've been around XRP long enough, you've probably heard that name before. Susan Athey is a Stanford economist who has been connected to Ripple for years. And here's where things become interesting. Although many people don't actively talk about her today, her relationship with Ripple goes back to the company's early days. In fact, she served as one of Ripple's original board members. When looking through Ripple's current leadership information, her name isn't prominently displayed the way some people might expect. Yet, according to information available through Ripple's own systems, she is still associated with the company's board structure. That alone raises questions. Why does someone with her background remain connected after all these years? And more importantly, what role has she played behind the scenes? To understand that, we need to go back several years. Long before digital assets became a mainstream topic, Susan Athey was already discussing blockchain technology and its potential impact on global finance. During a presentation at Stanford, she explained how distributed ledger technology could enable money and value to move more efficiently around the world. But what really caught attention was her direct involvement with Ripple. She openly discussed learning about the company through its founder, Chris Larsen, and eventually becoming an advisor before joining the board. That was years before today's institutional adoption narrative even existed. Think about that for a moment. Many of the conversations happening today about tokenization, digital payments, cross-border settlements, and blockchain infrastructure were already being discussed by people connected to Ripple nearly a decade ago. And this is one of the reasons some investors continue paying attention to XRP despite market cycles and volatility. Because when you look beyond daily price action, you start seeing a network of relationships that has been developing for years. But Susan Athey isn't the only example. Over time, Ripple has been associated with former Treasury officials, central banking experts, economists, financial regulators, and leaders from some of the world's most influential institutions. And that's where the story starts getting even more interesting. Because while many people focus only on charts and short-term price movements, others are paying attention to who is sitting at the table behind the scene. And when we continue this discussion, we'll look at why regulatory developments, institutional involvement, and XRP's role inside the XRP Ledger could become increasingly important moving forward. Now, this is where the conversation starts to get much bigger than one person or one leaked attendee list. Because when you look at Ripple's history, you begin to see a pattern. It's not just technology experts, it's not just economists, it's not just Silicon Valley investors. Time and time again, people with backgrounds in government, treasury departments, financial institutions, and regulatory organizations seem to appear around Ripple and the XRP ecosystem. And whether you agree with every theory out there or not, one thing is difficult to ignore. These connections have existed for years. But here's where things get even more interesting. While all of this is happening behind the scenes, the market is simultaneously watching something else very closely: interest rates, inflation, and crypto regulation. Right now, investors are paying attention to the Federal Reserve because lower interest rates have historically been favorable for risk assets. The logic is simple. When inflation cools down, central banks gain more flexibility. When interest rates eventually move lower, liquidity tends to increase. And when liquidity increases, assets like stocks and cryptocurrencies often benefit. That's one reason many analysts are closely monitoring recent developments in global markets. But there is another catalyst that could be even more important for XRP specifically, and that catalyst is regulatory clarity. For years, one of the biggest criticisms of the crypto industry has been uncertainty. Businesses wanted clear rules, institutions wanted clear rules, investors wanted clear rules, and now we're getting closer to that conversation than ever before. Recent comments from lawmakers continue pointing toward efforts to establish clearer distinctions between digital commodities, securities, banking activities, and blockchain-based financial products. Why does that matter? Because large institutions typically do not deploy significant capital into areas where the regulatory framework remains uncertain. They want rules. They want clarity. They want predictability. And once those conditions begin to improve, adoption often follows. That's why many people see regulatory progress as one of the biggest long-term catalysts for the entire digital asset sector. But this next point may be the most important part of today's discussion. Because whenever people talk about XRP, one question always comes up. What actually creates demand for XRP? And this is where many people misunderstand how the XRP Ledger was designed. The goal was never for XRP to be the only asset on the network. In fact, the opposite is true. The XRP Ledger was built to support multiple currencies, multiple assets, and multiple forms of value. Stablecoins, tokenized assets, digital representations of traditional currencies, real-world assets, all of these can exist on the same network. Now here's the key point. The more assets that exist on the XRP Ledger, the more opportunities there are for XRP to function as a bridge between them. And that's where liquidity becomes important. Think about it this way. If you only have one asset on a network, there isn't much to connect. But if you have hundreds or thousands of different assets, currencies, and tokenized products interacting with each other, suddenly you need efficient ways to move value between them. That's where XRP enters the conversation. And according to many XRP Ledger experts, this has been part of the design from the very beginning. The objective wasn't to replace every currency. The objective was to connect them. And the more activity that exists on the network, the more valuable, efficient liquidity solutions potentially become. This is why many supporters get excited when they see new stablecoins, tokenized assets, and financial products launching on the XRP Ledger, because they view those developments as ecosystem growth. More assets, more activity, more liquidity, more use cases. And that's exactly why some believe the biggest story isn't today's XRP price, it's the infrastructure being built underneath it. Now, does that mean everything happens overnight? Of course not. Markets don't work that way. Adoption takes time, technology takes time, regulation takes time. But history has shown that major financial transformations often look slow right up until they accelerate. And that's why many long-term investors continue focusing on utility, adoption, and infrastructure rather than day-to-day market noise. Because if the XRP Ledger continues attracting new assets, new participants, and new liquidity sources, the network itself becomes increasingly valuable. And that brings us back to where we started. A leaked attendee list, a hidden connection, a long history of influential people around Ripple, and a growing conversation about digital assets, tokenization, and financial infrastructure. Individually, each of those developments may not seem like a huge story, but when you put them together, they paint a picture that many investors find difficult to ignore. We'll continue watching these developments closely because the next few months could be extremely important, not just for XRP, but for the broader digital asset industry as a whole. If you enjoyed today's update, make sure to like this video, subscribe to XRP Update, and turn on notifications so you never miss the latest XRP news and analysis. Thanks for watching, and I'll see you in the next update.